Stocks correct on Wall Street as weak earnings and macro indicators signal an economic slowdown. European stocks too fall as global sentiment sours. Ahead of the Lunar New Year holiday, stocks in the Asia-Pacific open mixed as inflation in Japan hits a 40-year high. The SGX Nifty, however, indicates a mildly higher start for the Indian market. The crude rally continues in hopes of increased demand from China. Commentary from the International Energy Agency chief suggesting tighter energy markets in 2023 also fuels the rally in crude prices. FMCG giant HUL reports an inline third quarter. Commentary points to improving demand and easing raw material prices. Meanwhile, the company has also revised its royalty agreement with Unilever and will now pay as much as up to 3.45% of sales as royalty. Reliance Industries will report its third quarter numbers today. A mixed quarter is expected from the oil to telecom giant, with growth in the geo and retail segments expected to be offset by the weak performance in the petchem business. IT and Railways Minister Ashwini Vaishnav says India is on the path to become a major railway and telecom exporter in 3 years. Says Vodafone Idea's promoters need to bring in capital as conversion of government debt to equity isn't the way forward. M&M's Anish Shah says demand remains strong in India, but increasing capacity in time is the key challenge. Will double capacity in the next 12 months is something he says. Good morning in the Mumbai News Centre. I'm Sonal Bhutra and you're watching Power Breakfast. Last trading session of the week, and we have a lot to catch up on, especially on the global front, because the global markets like the US and the Europe, they were reeling under pressure. Inflation fears, demand fears is something that continues to impact these markets. And Asia too, largely mixed today. While we do have the Taiwanese index, which is shut, the Taiwan markets that is, Hang Seng is higher by around 0.7%. That's one of the major gainers as far as the Asian markets are concerned. However, markets are actually digesting Japan's inflation data. This time around, it came in at a 40, or it's basically the highest pace since 1981. The number is at around 4%. And post that, we are seeing that the Japanese government bond, also the yield rose to 0.41%, slightly below the central bank's upper ceiling of its tolerance range as well. So a lot of action as far as the central bank's action is concerned. And SGX Nifty, after this mixed session that we are seeing from the Asian markets, is indicating a mildly green start for our own markets. It has been quite volatile, as you can see on the chart. But yes, Asian markets and the movement on the SGX Nifty is something that we are watching out for as well. Let's talk about US markets. Wall Street ended Thursday's trading session lower, with the Dow Jones sliding over 250 points, the S&P 500 down 30 points, and the Nasdaq Composite shedding more than 100 points. The big mover on Wall Street was Netflix, which was up over 7% in after-hours trading session, reporting Q4 earnings. The online streaming platform added over 7 million paid subscribers in the fourth quarter, against street expectations of 4 million subscribers. In an important development, Reed Hastings will step down as Netflix CEO, even as he continues to hold the post of chairman at the streaming giant. All right, that's all about the global market action. We are seeing some weakness as far as the US markets are concerned, and the European markets as well. But how will these cues impact our own markets? What are the domestic cues we are watching out for? Our team is joining in to tell you just that. We have Vivek, Ekta and Nigel with us. Vivek is joining us first up to tell us all the market cues we need to watch out for in today's trading session. Vivek?
Well, good morning. As you rightly mentioned, it's a weak set. It's a weak global handover that we are getting. The Dow Jones ended negative for 2023 yesterday. So weak global handover from the US markets. Now coming to the European markets, yesterday after a while we saw a bit of a sharp sell-off there as well. So all of the indices ending lower by over 1%. Now crude oil prices continued their trend upwards. In fact, at the highest level since December 1st, 2022, Brent futures now trading closer to the $86 a barrel mark. Now, coming to the own Asian markets, what we're actually seeing is a very mixed set of cues and very subduedly positive set of cues that we are seeing. SGX Nifty 2 is indicating a mild green start as far as our own markets are concerned. Yesterday's session, after a strong two-day rally, markets cooled off yesterday. It saw a little bit of selling pressure from the top. Advanced decline ratio as far as our own markets were concerned was that 2:3 in favor of the decline. So key results today, Reliance, JSW Steel and HDFC Life is what the markets will keep an eye out for.
Okay, all right. So that is the market setup. But of course, a lot of stocks will be in focus on the back of earnings, expected earnings as well, news flow as well, actually. Ekta is joining us with that list. Ekta?
Hi, thanks for that. Well, I'll start with a whole host of result reactions. HUL, PVR, Canfin Homes, Hindustan Zinc, along with the fact that Vedanta will be selling international zinc assets to Hindustan Zinc as well, India Mart, L&T Tech, EU Small Finance Bank. So all of these stocks are going to be reacting to their numbers. Besides that, in terms of stocks and news, TCS, Canadian business jet manufacturer Bombardier, has selected TCS as a strategic IT partner. Sun has made an acquisition in the US for Concert Pharma for over $560 million. PSU banks will be in focus because the Finance Ministry PSU banks head met yesterday and they discussed proposed amendments to the IBC. We also have a couple of other stocks which would be in focus on account of other numbers which would be coming out. Separately, just to focus on a couple of more stocks in focus, we do have a couple of other stocks which will be in focus, which will be on account of Anil Somani being appointed as the Bata Chief Financial Officer. Jubilant Foodworks, which is going to be expanding their network for their stores. They are planning 40 to 50 Popeye India stores as well in the next 12 to 18 months. BHEL has won a huge order worth around 300 odd crores. Results today, not to mention Reliance Industries, which we will be covering through the day, RBL Bank, Petnet, LNG, HDFC Life Insurance, Bandhan Bank, LIT, LTI Mindtree, JSW Steel, and a lot of numbers tomorrow as well. So do watch out for the likes of ICICI Bank, Kotak, IDFC First Bank, SBI Life, Ultratech Cement. All of them will be reporting numbers tomorrow. So a stock movement ahead of that will also be closely watched.
Okay, all right. That's a long list, right? It's going to be a busy day. Thank you so much for that update. Finally, Nigel is joining in with all the cues from the F&O space. Hey, Nigel, morning.
Hey, morning, Sonal. Yesterday we saw some unwinding of positions or some lightening on the Nifty futures itself because the open interest was down by close to around 7%. What did the FIs do? Well, they added some mild short positions and they unwound some long positions, which brings the long-short ratio at around 50% apiece. On the option side, well, the 18,500 and the 17,500 put, well, they were very active in trade. In fact, they were some of the most active strikes in yesterday's trading session. Maybe, in fact, some pre-positioning ahead of the budget in case we get a bit of a swing of 400-500 points, or that appears to be some, a bit of a punt that's taken out there. But the important one is the 18,000 put. Now, that has the highest open interest on the put side. And out there, we saw some open interest addition. Now, you just deduct that 70 rupees from around that 18,000 odd mark. You're counting on that 19,000, 17,930 odd mark holding out. While on the upside, there's going to be a big resistance zone between this 18,200 to around 18,300. And that perfectly ties in with the technical levels that should come up for you on the screen. The first stop loss for a bullish perspective is the 20 DMA, 18,030. If we break that, then maybe we slide back down to around the 100 DMA. And on the upside, the 50 DMA will be a bit of a fight. We got the support range up for you as well as the resistance levels. On the Nifty Bank, remember, it's been trying to make its way to the 20 DMA, but it's being met with resistance out there. So breaking that 42,600 is going to be very, very important if the Nifty can get up and going. SGX Nifty suggesting some mild green. Let's see whether or not that comes about. But at around that 18,200, 18,250, there's firm resistance. So interesting to see whether we can end the day closer to in the northward direction. Back to you.
Yes, that's the level we'll be watching out for. Nigel, Ekta and Vivek, thank you so much for joining us and taking us through the trade setup for the day. Time for a short break now. When we return, Reliance Industries will report its third quarter earnings. Later today, we'll line up the key expectations after this very short break. Stay tuned. Welcome back. Well, a lot of Nifty stocks will be in focus today. Let's start with the big earnings reactions which are expected today. HUL reported its third quarter earnings in line with street expectations, but there was a twist as far as royalty is concerned. Magnam is joining in with the earnings fine print. Magnam?
But as far as the results for HUL are concerned, the third quarter, they were largely in line with expectations, albeit at a higher end of street's expectations. But the fly in the ointment was the announcement that they've made with regards to rearranging the royalty agreement with parent Unilever itself. So let's talk about what's good about these numbers. Revenues coming in at 15,228 crores, above street expectations of 14,860 odd crores. The volume growth came in at 5%, higher end of the range of 4 to 5 odd percent. And the EBITDA as well, a little over 3,500 crores, beat street expectations of 3,500 crores itself. Gross margins improved quarter on quarter, and the net profit as a result of which came a little over 2,500 crores. The street was working with a number just under 2,500 odd crore rupees. The management commentary as far as demand and operating environment is concerned was rather optimistic as well. They said that, inflation has, we've seen the worst of inflation and now things are improving, and things in both rural and urban India as far as demand is concerned are improving as well. But the fly in the ointment and what wasn't good about these results was the royalty agreement that has been revised with Unilever. They will now pay 3.45% of sales versus 2.65% that they paid earlier. This will be increased in a staggered manner over the next 3 years by 45 basis points in this year, by 25 basis points in 2024 and 10 basis points in 2025. So this 80 basis points increase will take place over the next 3 years. The management said that this has been revised for a period of the next 5 years. So let's see where that goes, because maybe the street wasn't prepared for this and will not like this. The demand situation as well as the numbers, no problems. The royalty, a googly.
Oh, yes, it is. Manglam, thank you so much for that analysis. In fact, let's listen into what Sanjeev Mehta, MD and CEO of HUL, had to say after the earnings release.
The last royalty increase and the service fees increase, all this took place in 2013. And during this period, 2013 to now, we have doubled our turnover and we improved our operating margin by nearly 1,000 pips. We have a symbiotic relationship with Unilever, and we have access to great brands, we have access to great technology, product superiority. So these are of immense benefit to us, which enables us to create the competitive edge that we have in the market.
All right, that's the word coming in from the HUL's management. But moving on to the other Nifty stock, and it's a Nifty heavyweight, Reliance Industries, will be reporting its third quarter numbers later today. Sonia is at the big wall to line up all the key expectations. Sonia. Well, thanks for that. Reliance is all set to come out with its numbers. If you take a look at the stock performance in the last 1 year, it's been absolutely flat. In fact, the stock is down 16% from its 52-week high. Now, this time around, the numbers are expected to be a mixed bag. While the consumer-facing businesses will do well, the oil-to-chemical business has been under pressure. There's a quarter-on-quarter improvement seen in the refining business, but that will be offset by weakness in the petchem segment. In fact, the Singapore gross refining margins contracted further to $6.2 a barrel this time around. Now, yes, there will be growth in both Geo as well as retail, but that will be offset by the weaker performance in the oil to chemicals business. In fact, even within Geo and retail, there has been some amount of slowdown, and hence the EBITDA growth on a consolidated basis will remain quite muted. Let's take a look at Geo itself. There's a slowdown in subscriber additions that we're expecting for Geo this time. Here are how the numbers are stacked up. It's just a 6 million addition to the subscribers in this quarter versus 7.8 million last quarter. Not just that, even the average revenue per user is expected to be largely flat on a quarter-on-quarter basis. And if you move on to retail as well, there's a moderation in underlying growth because of a growth slowdown in middle income consumption, no major recovery in the rural market that will hit the retail business. If you look at the numbers, retail revenues are expected to grow just 12% on a quarter-on-quarter basis. Now let's run through the consolidated performance. On a consolidated basis, we are expecting revenues to be largely flat at 2.31 lakh crores. The EBITDA will grow by about 7% sequentially, while the profits are expected to grow just about 15% on a sequential basis. There are a couple of key monitorables though in this quarter's numbers. One, they've made a huge investment of 75,000 crores. That's the announcement that they've made in the new energy business. More clarity on that will be awaited. Any details on the growth in their retail business will be keenly watched out for. But I'm also closely tracking what happens with the telecom business and any pricing action over there, because lack of tariff hikes is what has kept a lid on the gains for the stock, and hence the stock has underperformed the market and is still 16% below its 52-week high. Back to you. Sonia, thank you for that. But of course, standard disclaimer, Network 18 and TV18, the companies that operate CNBC-TV18 are controlled by an independent media trust, of which Reliance Industries is the sole beneficiary. And with that, we'll slip into a short break. Stay tuned as we get you excerpts from our conversations with Telecom Minister Ashwini Vaishnaw from the sidelines of the World Economic Forum in Davos. Stay tuned. Welcome back. You're still tuned into Power Breakfast on CNBC-TV18. Let's bring you some exclusive commentary from Davos. We are engaged closely with current shareholders to ensure enough capital allocation from promoters that is to be brought in for Vodafone. That's the word coming in from Telecom Minister Ashwini Vaishnav. Speaking to Shireen Bhan, the minister, who also holds the railways portfolio, spoke about the success of PLI schemes. Listen in.
See, Voda needs capital. For capital to come in, capital has to come in either in form of equity capital or debt capital. Conversion is a non-cash transaction. Non-cash transaction is not going to bring capital. So what's important is that this is a very complex issue. I wouldn't like to comment more than this, but certainly we are engaged very closely with the current shareholders and make sure that there is enough capital is brought into the company so that it survives.
Capital from the promoters, you mean?
Yes.
Let me ask you about the PLI schemes, because you gave us an indication that the government is looking at the possibility of more sectors being added. Any ideas on which of the sectors that you believe will benefit the most if there were to be a PLI? Has there been an identification of the new sectors that could be included? And can we expect a decision, perhaps even as part of the budget?
See, the success of PLI is today very well known. The payoff from PLI scheme is clearly understood. The entire PLI scheme is about 1,97,000 crore, and this much investment which the government is making is actually returned back just by one PLI of the mobile phones, in terms of additional GST that you get. So we believe that yes, this is a great story which has created jobs, which has created new ecosystems, which has deepened the supply chain in the country. So we are definitely looking at more sectors, and sectors which have good employment potential, sectors which have strategic importance for the country. These are the sectors we are looking at.
Okay, important commentary. Of course, we'll keep getting you excerpts from conversations that we are having in Davos through the course of the day. But with that, we'll wrap in this edition of Power Breakfast. But before we do that, Anand Ambani, the youngest son of Mukesh and Neeta